A very happy evening to everybody. In today's session, we'll be discussing on the tax laws from the old syllabus subject perspective on December 2023 question paper in terms of the both part 1 and part 2. In the old syllabus, we had part 1 50 marks on income tax, the direct tax provisions, and GST in terms of 50 marks from the perspective of GST and customs part 2. So the part 1 will have 50 MCQs and part 2 will have 50 MCQs, and the time allowed for 3 hours and maximum marks is 100. Every question will contain 1 mark each. So with that perspective, we'll proceed further in discussing the question by question, and let's see what are the pointers that we get. Amar, a resident, but not ordinary resident in India, earned the following income during the previous year, 22-23. So capital gain of rupees 5 lakh on sale of building located in Agra but received in Australia is the first income. Interest of rupees 4 lakh from Canada Development Bonds, 25% of which is received in India. The amount of income chargeable to tax for the assessment year 23-24 is, so here we'll have to understand from the perspective of the scope of total income section 5, which says based on the residential status, what all incomes are taxable in India and what all incomes are not taxable in case of a non-resident or ordinary resident. So they've given the residential status, so we need not calculate the residential status, but we'll have to look from the perspective of the total income, scope of total income. For a resident but not ordinary resident, whatever is received in India, deemed to accrue or arise in India, is both included. The first one is deemed to accrue or arise in India, and the second one is received in India. Though it is accrued outside India, but it is not taxable fully, because in case of a business connection in India, if the business is operated in India and it is accrued outside India, then entire thing is taxable in case of a resident but not ordinary resident. Otherwise, only what is received in India, what is accrued in India, what is arised in India is taxable. So 5 lakh is entirely taxable. Out of 4 lakh, 25% is taxable. So the correct answer here will become option B, 6 lakhs. Option B, 6 lakh. So this will become the first answer for the first one. And as and when we proceed further, if there are any pointers in terms of questions, you can put it in the chat box where I will be able to look into it. Hope all of you are able to see the screen and the voice is audible and clear. Can I have a quick confirmation on the chat box so that I'll get a clarity so that I can proceed further? Okay. Right. Let's proceed to the next link. A reduction of rupees 1 lakh towards unrealized rent was allowed to Z, being the owner of a house in the assessment year 18-19. Z sold the house on 14th January 2020, and subsequently in previous year 22-23, he realized rupees 80,000 from the tenant. If Z spent rupees 10,000 for the realization of the rent, the amount taxable out of the realized rent. So here we'll have to discuss section 25A of realization of unrealized rent. It says whatever deduction is allowed, entire deduction was allowed in 18-19, and he sold his house on January 2020. After selling the house, he realized in 22-23 80,000 rupees. But however, the provisions of house property says that even if he is not owner, when he realizes the unrealized rent, that will be available for the taxation, or that should be subject to taxation. So when we say from this perspective of subject to taxation, 80,000 will be considered as taxable in the assessment year 23-24. What about the expenditure? No expenditure is allowed, only standard deduction of 30% is allowed. So thereby 80,000 minus 30%, 56,000 will be taxable. So entire 80,000, wrong answer. If somebody do 80,000 minus 10,000, then you will end up selecting 70,000. That is also wrong answer. If somebody thinks that he is not the house owner, and if you select nil, then that will also become wrong answer. The correct answer is 56,000 as per the provisions of section 25 of the income from house property. Yeah, let's proceed to question number 3. Section 2, subsection 24 of the Income Tax Act defined income. So here they're asking the theoretical question from the perspective of whether is what kind of definition is given. whether it is an exhaustive definition, exclusive definition, descriptive definition, or an inclusive definition. So from the perspective, income includes the word section 2 subsection 24 starts with the wordings called as income includes. Includes means inclusive definition. So third, fourth option is the correct answer. An individual be an ordinary resident. So Albert, age 75 years, mortgages his property with Housing Finance Corporation under reverse charge scheme. So whenever a property is given under a reverse charge scheme, which is approved by the RBI for the purpose of getting income on a later date, that will be exempt and not taxable. So here they're looking at whatever money is received 30,000 per month from mortgage, so calculate the amount which is taxable under Income Tax Act 1961. So this, somebody thinks that it is entirely taxable, then you put 30,000 into 12, you select 36,000, wrong answer. And if somebody gives as a 30% deduction on 3,60,000, if you give 30% deduction, you will select 2,52,000. That is also wrong answer. So the correct answer is A, option 6A, nil is the correct answer. Okay. Now moving to the further in terms of the next question number 7. Which of the following incomes of a political party is exempt from Income Tax Act? So Income Tax Act section 13A, assessment of various assessees, gives us the provision of income from other source, house property, voluntary contribution, and capital gains is completely exempt. So all of the above is the correct answer in terms of the section 13A. So political parties, voluntary contributions is not taxable, capital gain is not taxable, house property income is not taxable, other sources not taxable. Everything is not taxable. Moving to the next question number 8. Partial integration of agriculture income with non-agriculture income arises when both income in case of senior citizen are as follows. Now here, we know that non-agriculture income and agricultural income, non-agriculture income and agriculture income, when both the incomes are there, the partial integration will apply. Agriculture income should be more than 5,000 and non-agriculture income should be more than the basic exemption limit. If we simply conclude without reading the question properly, then we will select option B as the correct answer. That is, agriculture income is above 5,000 and non-agriculture income of 2,50,000, which is again a wrong answer because they've given senior citizen. When the senior citizen is given, now you will check 3 lakh and 5 lakh. Which one? You will get confused whether to take 3 lakh or 5 lakh. If the word super senior citizen is given, then you would have taken 5 lakh. Since it is just senior citizen, 3 lakh is applicable. So option C is the correct answer. Agriculture income of 5,000 and non-agriculture income of 3 lakh. Option C is the correct answer. So this will become very important for us to understand as to how we read the question, what information is given in the question, and how we start answering the things. Let's proceed to the next question. Exemption under section 10 subsection 48C is given under Indian Strategic Petrol Reserves Limited or Oil and Natural Gas Limited or Gas Authority. So this will get confused. You need to be specific in understanding what section is giving what exemption. So section 1048C talks about the Indian Strategic Petroleum Reserves Limited 9B. Okay, so that is the correct answer. Question number 10. From the following in which case employer-employee relationship exists and therefrom the income is taxable under the income from salary. So which of the following that they have given? Partner of a firm, there is no employer-employee relationship. Official liquidator, is it there or not? They also doesn't have. Member of Parliament, who is the employer, who is the employee? MP is not an employee of anybody. Director of a company receiving fees for attending board meetings, he is also not employee. So where does the employer-employee relationship exist? A, elimination. C, elimination. D, elimination. Official liquidator, the moment he is appointed, he will act as employee of the company. So official liquidator, whatever he gets money, that will be taxed as income from salary. So 10B is the correct answer. Moving on to the next question. So we have completed till question number 10. Moving on to question number 11. If there are any questions, parallelly you can put it on the chat box and that will be considered in terms of the explanation. Question number 11. As per section 10, subsection 14 of the Income Tax Act, read with rule 2BB of the income tax rules, the extent to which compensatory modified field area allowance is exempt is up to rupees 800 rupees per month. When you know the rules, you will not get confused. They will give the correct answer of 800 rupees per month. 800 per month. Okay, so that will become the calculation how you need to remember. Leave encashment at the time of retirement of an employee is exempted for government employee under section 1010AA. Here, government employee means who? Only central government and state government, or central government, state government and local authorities, or central government, state government, employees of local authorities and statutory corporation. So in case of gratuity, it is central government, state government and local authority. But when it comes to leave encashment, it is only central government and state government. So the moment if you see government employees, means you will not, if you have read only as government employees, then you will not remember the correct answer for writing there. So you will have to be specific in terms of understanding certain definitions. Moving to the next question, question number 15. Professional tax, if paid by employer on behalf of employee, is allowed as deduction, not allowed as deduction, added to the income of the employee and then allowed as deduction. So professional tax, if paid by employee, it will be allowed as deduction, but first it will be added as income. If it is not paid by employer, then only it is allowed as deduction. Since it is paid by employer, first it is added to the income and then allowed as deduction. So option C is the correct answer. Question number 14. Out of the following, which will be deducted from gross annual value of the house property? What all will be deducted from gross annual value? Municipal taxes of previous year and current year paid by the landlord but reimbursed by the tenant. Municipal taxes of current year period paid by the tenant. Municipal taxes of current year payable. So this is not paid. Definitely when it is payable, it is not allowed. Municipal taxes of previous year and current year paid by the owner during the current previous year. Okay, so this is something that you'll have to consider. So if you see 14, the answer will be D, will be correct answer, because even if it is earlier year or the current year, the fact that it is paid in the current year will be allowed. Here, if you see, it is reimbursed by the tenant. If it is reimbursed by the tenant, it is not actually paid by the employer or the landlord. So thereby, this is also wrong answer. If it is paid by tenant, anyhow, it is not allowed. So this is question number 14. Going to next question, question number 15. Income computation and disclosure standards notified by the central government are compulsorily required to be maintained by all the SCs following mercantile system of accounting while computing income under the head profits and gains and income from business or source, except to whom it is not applicable, who are not covered, individuals and HUF who are not covered under tax audit provisions. For them, it is not applicable. For individual, it is applicable. HUF, it is applicable, who are covered under the tax audit. So the most specific correct answer is for individual and HUF, it is not applicable only if they are not covered under the tax audit provisions. So moving to the next question, motor buses, motor lorries, and motor taxis used in a business of running them on hire acquired on or after 23rd August 2019, but before 1st April 2021 and is put to use before 1st April 2021 will be entitled for a depreciation act. So here 30% is the correct answer, but in the guideline answer, they have also told option D as the correct answer. So option D is the option B and option D both are given, but currently the relevant answer is 30%. Okay. Moving to question number 17. AB Limited is in trading business. It bought out a new machinery for the purpose of its business on 15 September 2022. So the additional amount of depreciation available to AB Limited will be, the moment we see that machinery, definitely the additional depreciation is applicable for plant and machinery, not for all other assets. But one more condition we need to remember, if they're engaged in manufacturing business. Since he is under trading business, nothing will be allowed. Only nil is the correct answer. Okay, so additional depreciation will be available, will be nil. Okay, in other words, even if you have to select 3 lakh, 1 lakh 50 and 75,000, how do you select? The additional amount of depreciation is a percentage or an absolute amount. They've not given any amount of information. Even if you don't know the answer, this cannot be answered because there is no mechanism. There is no relevance of these three options. So thereby, nil will be the correct answer. Even if you don't remember the provision, you can reasonably, logically, by applying common sense, you can get the answer for 17th question. Question number 18, P Limited, an infra company, issued a zero coupon bonds, the face value of which is 5 lakh or 3 lakh 60. That means a zero coupon bond is issued at a discounted price. If it is issued at a discounted price, how we will recognize the expenditure or the deduction in the books of the company? What is the difference between the issue price and the face value? 5 lakh minus 3 lakh 60,000. That means it is 1.4 lakhs is the total discount offered, which will be available over the period of 4 years. So 1.4 lakh divided by 4, you will get 35,000. So 35,000 every year it will be allowed. So option C is the correct answer. So you should know this. Otherwise, it will not, even if you would just say 1.4 entirely allowed, there is no option of 1.4 lakhs for you to select. So you should then get triggered as to how it is going to be allowed, and then you'll have to select 35,000 as the correct answer. It would have become difficult if they would have given 1.4 lakh as a correct answer, one of the option. Mr. X sold a building for 5 lakh as a part of his business. The stamp duty value for the building is 5 lakh 20. The valuation officer determines the value at 5 lakh 70, and the assessing officer at the time of assessment took 6 lakh. What will be the correct value of sale consideration for computation of business income? So section 43 CA says, in case of a business of immobile properties or person who is engaged in real estate, he will be able to, the value for the purpose of deemed fair value of deemed sales value for the purpose of computation of income from business shall be the stamp duty value or 110% of the actual sale consideration. So 110% of actual sale consideration is 5 lakh plus 50,000, 5.5 lakhs. But if the price or the stamp duty value is higher than 5.5 lakh, then the stamp duty value will be considered as per section 43CA. Since the stamp duty value is less than 5.5 lakh, the actual sale consideration of 5 lakh shall be considered. 5 lakh 70 is not relevant, 6 lakh is not relevant. The provision is only talking about these two values and 110% of actual sale consideration. Thereby, 19A is the correct answer. Going to the next question. What is the cost inflation index for financial year 22-23? So it was 331, correct answer. Now what is applicable for financial year 23-24? For your exams, 22-23 is no longer relevant. 348 is the latest cost inflation index, which you should remember for the exams that are going to be conducted in the month of June 2024. AB Limited has a building purchased on 12th March 2009. So 2009, they had purchased the building, and that building was used for company's business. The WDV of the building is 45,250 and sold for 1,10,000. Calculate the capital gain in this case. So this means the entire building is sold, so the block ceased to exist. So from 45,000 to 1,10,000, 1,10,000. So the difference is the gain, and that gain will be considered as long-term or short-term. If somebody applies the rule of 24 months, then they will consider as long-term capital gain. But in case of depreciable assets, every capital gain is a short-term capital gain. So option A is wrong. So option C is correct. Short-term capital gain of 64,750. So this becomes very important as to how you minutely, with clarity, understand the concepts so that it will be clear for you to give the correct option. Then comes section 50C of the Income Tax Act. makes a special provision for determining the full value of consideration in case of transfer of what kind of asset? Land, plant and machinery, building, or land and building both. So option B, land and building, both are considered for the determination of fair value under section 50C. Under which section? Assessee has to reinvest the entire net consideration to claim full exemption on long-term capital gain earned from transfer of long-term capital asset other than a residential house. If it is a residential house, 54. If it is other than residential house, 54F. 54E, D, C are wrong options and not correct. So 23 is option A. Moving to the question number 24. Interest on securities shall be taxable under income from other sources, whether it is on due basis, on receipt basis, or as per the direction of the assessing officer, or on the basis of accounting method regularly employed. So this is the correct option. So whatever method the employee has chosen regularly, 1 year if he has chosen for cash basis, that is receipt basis, then receipt basis should be followed every year. And in consistently, if they are following due basis, then they'll have to follow the due basis. So accounting method regularly employed by the assessee will become the correct option. Mr. Mithun, employed in a firm where he is regularly receiving consolidated salary of rupees 25,000 per month during 22-23 and also received a family pension of rupees 15,000 per month during his total income for financial year 22-23. Now this has a different view for financial year 22-23 and financial year 23-24. So let us answer from the perspective of 23-24. Now they're not given here. So let's say you received a family or a salary income of 25,000. So 25,000 into 12 is 3 lakhs. 25,000 into 12 is 3 lakhs. And 15,000 per month into 12 is 1.8 lakhs. So total 4.8 lakhs is the salary received or the income. But if it is under old regime, you have deduction of standard deduction plus pension, family pension, 1/3 or 15,000, whichever is lower. So standard deduction of 50,000 plus 1/3 of the pension or 15,000, whichever is lower. So 15,000. So you get 65,000 deduction. So when 65,000 deduction is taken from 4.8 lakhs, the answer will become 4.15 lakh. So this is if it is old regime. If it is new regime, 50,000 is allowed for 23-24. In 22-23, standard deduction was not there. Okay. Then if it is old regime, both 50,000 and 15,000 was not available in 22-23. Thereby 4.8 lakh entirely becomes taxable under old regime. So this is under, new regime for 22-23, and this is under old regime for 22-23. But under 23-24, standard deduction is permitted. So the option 4.8 lakh minus 50,000, 15,000 is not applicable. So 4.3 lakhs is the correct answer for 23-24 in terms of the deduction, because 50,000 is available from perspective of new regime. Old regime still continues to be 4,15,000. So as and when the assessment year changes, you need to modify the answer. You cannot merely go from the guideline answer. Guideline answers are given or the correct answer is given, which is applicable for the financial year 22-23. But the financial year for which you are going to write the exam is 23-24. Accordingly, you have to make the changes. A person has a loss from house property in the current year. It can be set off against income from. Here again, you'll have to think from old regime and new regime. The answer, any other head of income up to the maximum of 2 lakh. Only income from house property without any monetary limit, both A and B. If you are under old regime, both A and B is correct. That means any other head of income up to 2 lakh is permitted, and income from house property without any monetary limit is correct. So C is correct answer if you're going for old regime. If you're going for new regime, A is not applicable. Okay, income, other head of income set off is not applicable, and only income from house property without any monetary limit. B is correct in case of new regime. So if you either write B also is correct answer, C also correct answer. So you can select C directly. Public Provident Fund account can be opened by an individual for the purpose of deduction under Section 80C in the name of self, spouse, children. So all of the above is permitted. Public Provident Fund can be opened by an individual for the purpose of deduction. 80C provides self, spouse, children. All of the above is the correct answer. Then move to 28th question. So let me take the 27th. So 27 is done. So we move to the 28th. Mr. P has interest accrued from NSC. Maturity date is after 2 years. 15,600 received during the year 22-23. He invested 1 lakh and his wife invested 50,000 in NSC. What will be the deduction under Section 80C, assuming that no other investments are made by Mr. P? Mr. P has accrued interest from NSC. Maturity date is after 2 years. So 15,600 is the deduction along with 1 lakh. 50,000 is invested by wife. So Mr. P will get only what he has invested or what he has getting the deduction. So 50,000 is done by wife, so that will not be included. If you include that, then it will become 1,65,600. And if you see 80C, you will select 1,50,000. Both are wrong. And if you do not include 15,600 because it is considered as reinvested. If you have reinvested in NSC, that is also considered as deduction. So 1,15,600 is the correct answer. For claiming deduction under Section 80JJAA, the assessee must obtain the audit report within due date for filing the tax audit report. So C is the correct answer. Due date for filing tax audit report under Section 44AB of the Income Tax Act 1961 is the correct answer. Moving to question number 30. Contributions made other than by way of cash by an Indian company in the previous year to any political party shall be allowed as deduction to the extent of contribution made. This is other than by cash. So entire 100% is allowed. So this is not a donation. It is a political party. 80GGB will be applicable. Section 80GGB says 100% of the donate contribution to political party is applicable. If individual is making, then Section 80GGC shall be applicable. Relief under Section 89 of the Income Tax Act is available, except to whom? Except to whom it is applicable: advance salary received or advance received on voluntary retirement or gratuity received. So here you need to remember as to what they're asking. So advance salary received also relief is applicable. Arrear of salary received also it is applicable. And gratuity received also it is applicable. But amount received or receivable on voluntary retirement, that will not be considered for relief under Section 89. Option A is the correct answer. That is question number 31. Any doubts or any questions? Parallelly, you can put it on the chat box so that we can discuss as and when we proceed alongside in terms of the questions that are given or in the chat box that are applicable. Moving to question number 32. The amount of rebate of income tax under Section 87A of the Income Tax Act available to a resident individual whose total income do not exceed the 5 lakh. If total income do not exceed 5 lakh for a particular year, and then the rebate maximum is 12,500 or 100% of the income tax, whichever is lower. So option A is the correct answer. Which of the following is a company under Income Tax Act? Foreign company, Indian company, closely held company, all of the above is a company as per the Income Tax Act. It includes all types of companies. Then comes Section 2, subsection 22E of the Income Tax Act, which deems certain payments as dividend is applicable to the shareholders of closely held company. So private company is not applicable, widely held company not applicable, media company not applicable, closely held company it is applicable. Section 2, subsection 22E dividend. As per Section 115BG of the Income Tax Act, where the total income of the assessee includes any income from transfer of a carbon credit, then such income shall be taxable at a concessional rate of 10% on gross. So you should remember that it is on gross and not on net. So option C is the correct answer in terms of the 115BG. Going further, normal tax liability for a company assessee is 5 lakh. And tax liability under MAT is 8 lakh. So the Section 115 BBJ say that the whichever is higher shall be paid. So MAT will be paid, the tax payable will be 8 lakhs. And the MAT credit shall be difference between the MAT liability and the normal liability, that is 3 lakh. So option B, 8 lakh of tax payable and MAT credit carried forward shall be 3 lakh 36. Equalization levy in case of e-commerce operator is deductible if the aggregate amount of the consideration of a specified service in a previous year is how much. So section 37 here, you need to remember the e-commerce operator is deductible. The aggregate consideration that is given is the limit given under the equalization levy is 1 lakh. Okay. So aggregate amount of the consideration for a specified value in a previous year exceeds 1 lakh. So the options do not contain 1 lakh. So thereby none of the above is the correct answer. 38. In case of issue of shares at premium by listed companies, share premium is considered as income under the head capital gain or income under from other source, or considered as income under the income from gains or business or profession, or not considered as income at all. In case of listed companies, it is not considered as income. Correct answer is D. If it is unlisted company, the share premium will be considered as income from other sources. So you need to remember what is the question and for whom it is applicable. Accordingly, you need to select the answer. The provisions of section 139AA of the Income Tax Act shall not apply to which of the following individual if they do not possess the Aadhaar or enrollment ID. To whom all it is not applicable? A person who is aged 80 years or more, non-resident and a non-citizen. All of them it is applicable. That 139AA is not applicable in all of these three cases. So D is the correct answer. 40B, form number 12BA, Income Tax Act contains which of the following? What it shall contain? It shall contain details of the declaration taken from the employee by the employer, details of perquisites and profits in lieu of salary chargeable under section 17(3) of the Income Tax Act. So it is a form given by employer to employee as a declaration in terms of the details of perquisites and profits in lieu of salary chargeable under section 17(3) of the Income Tax Act. What is the time limit for filing updated return under section 139(8)(a)? So it is the 2 years from the end of the assessment year, you can file the updated return. So after the 2-year period, 2 years is available. If you file it in the first 12 months, 25% penalty is payable. If you file it in the next 12 months, then you'll have to pay 50% penalty. So C is the correct answer. Then comes any person who has not filed return of income within the allowed time under section 139(1), when he can file the belated return or a revised belated return before 31st December or the relevant assessment year or before the completion of the year. So A is the correct option. If there is an apparent error in the intimation dated 15th June 2018 issued by the assessing officer under section 143(1), then the time limit for filing application for rectification under section 154 is available up to 4 years from the end of the year in which the notice is received. So 18 means it is 1819. So 4 years from this, 1920, 2021, 22, 21, 22, and 22, 23. So that will become 31st March 2023. So option D is the correct answer. With up to 4 years, you can have time to file rectification application if there is any intimation error. Buyer purchases goods liable for TCS for being used in manufacturing processing. The provisions of section TCS shall not apply if buyer gives a declaration in form number 27C. Okay, form number 27C. All these things is direct theoretical question, which if you are aware correctly, you will be able to get the answer. If you are not read, then you will get confused. An assessee who declares income in accordance with the presumptive taxation, how many installments of advance tax is required to pay? If yes, what is the due date? So he is required to pay only one installment on or before 15th March of the financial year. Okay, so 15th March of the financial year is the correct answer. So option C. So you need not pay 4 installments. You need to pay only 1 installment, and that 1 installment should be paid 15th March, not 31st March. Interest is payable to the assessee on the amount of refund under the Income Tax Act only if the refund amount is more than 10% of the tax determined under section 143(1). So the amount of refund should be more than 10% of the tax determined under section 143(1). After the receipt of order from Income Tax Appellate Tribunal, the time limit for filing appeal to the High Court. So High Court has a time limit of 120 days. So here we have first level of appellate authority 30 days, second level of appellate authority 60 days, income tax appellate tribunal 120 days, and Supreme Court 90 days. So this is the first level of appellate authority, that is CIT appeals. 30 days is the timelines, and then the appeal to the income tax appellate tribunal 60 days. From there, if you have to go to High Court, 120 days. From there, if you have to go to Supreme Court, it will be 90 days. So here they've asked from High Tag to High Court, what is the days? Like High Tag to High Court, 120 days. 47, option A is the correct answer. 48, what is the penalty provided for underreporting and misreporting? If the amount is less reported, 50% is the penalty, that is for underreporting. And if the amount is not at all reported, 20% is the amount of penalty that will come. So misreported, 200%, option A. So all the others are not correct. Okay. So this 50% and 200% is the correct option that you need to consider. 48, option A. Then we have 49. Advance tax is not required to be paid by whom? A person who is aged more than 60 years or not having any business income is the person who is not required to pay advance tax. And if they would have given, if the liability is less than 10,000, they are also not required to pay, but they're not given that scenario here. Mr. H has been provided with a servant by his employer whose salary is 5,000 and is not a specified employee. So whose salary is 5,000 per month means 60,000 is the monthly or yearly salary. In this case, if he is not a specified employee, the amount of taxable for the perquisite is nil. So it is not taxable. So if you think that it is taxable, then you will select option B, which is wrong. If you think 50% wrong, 75% wrong, nothing is taxable, option D is the correct answer. With this, we complete the discussion of the first part of income tax questions of 50 marks. Now we proceed to GST and customs. Which of the following statements is not true in case of GST? GST is a destination-based consumption tax. GST ensures seamless flow of ITC. GST is levied on goods and services at equal rates. GST adopts dual taxation model. So this is true. It is a destination and consumption-based tax. Seamless flow of ITC, that is correct. GST is levied on goods and service tax at equal rates. This is wrong. Okay, C is the wrong answer. Or GST adorns dual taxation. So which is here, if you think from a perspective of goods and services at equal rates, that means GST, the tax itself on both goods and services. Equal rates, correct. So it is a one tax. So this is also correct. GST adorns dual taxation model. So dual taxation model, they are removing dual taxation model is what they're telling. Ideally, GST follows dual taxation model because central is there and state is there. So it follows dual taxation model. It does not eliminate the dual taxation model. So D is the not true statement. Dash was the first state in India to pass the state GST bill. So the chapter 1 of GST clearly talks about the basics. Telangana was the first state that adopted the state GST bill. Then comes the important parameter that constitutes supply under CGST Act. It involves supply of goods or supply of service both. It is for a consideration. It is made in the course of furtherance of business. Okay, so it is all three are important parameters for supply. So option B, all of the above is the correct. What would be the rate of tax applicable in case of a mixed supply? In case of a mixed supply, highest rate of tax will be considered. The tax rate applicable on supply attracting highest rate of tax is correct answer. 54. C is the correct answer. Moving further to question number 55. Which schedule gives the transactions which are outside the ambit? Schedule 1, Schedule 2, Schedule 3. So we know Schedule 3 talks about the transactions which are outside the ambit of supply. So Schedule 3 gives the correct answer. Integrated goods and service tax is payable on interstate, intrastate, both A and B deemed supply. So 56 only talks intrastate means the CGST, SGST will come into picture. So both A and B is not correct. This is not correct. Deemed supply is not correct. Option A is correct. Interstate supply. So 56 is option A. Then comes value of supply under section 15(1) of the CGST Act. Now, if you are very much generically, if you answer common sense, then you will generally common sense, you will apply wholesale price is not correct, retail price is not correct, transaction value, accessible value. The more word suitable goes with accessible value. And if you select accessible value, then your answer will be wrong. Section 15(1) very specifically says transaction value is the correct option. So accessible value is only in customs. In GST, it is transaction value. So option C is the correct answer. Then comes Mr. A is an air travel agent providing the following details. Basic airfare collected on domestic booking 5 lakh. Basic airfare collected for international booking 10 lakh. Determine the total value of taxable service. So where there is a specific rule which gives that the valuation of supply, which says on basic airfare collected on domestic booking, it is 5% of 5 lakh. This is not 50,000, this is 5 lakh. And 10 lakh, it is international fare, it is 10%. So 5% of 5 lakh is 25,000 and 10% of 10 lakh is 1 lakh. 1 lakh plus 25,000, 1 lakh 25,000. So the taxable supply value will become 1 lakh 25,000. Option A is the correct answer. Any questions? Parallelly, you can put it in the chat box, or any doubts, we can discuss that as we proceed during the discussion. Moving to question number 59. Which of the following is treated as incidents and expenses under section 15 to section C of the CGST Act? Packing expense, payment charges, commission, all of the above is considered as the incidental expenses, and it will be considered in the taxable value. So all of the above is the correct answer. Which of the following is the rule for residual method of determination of value? Rule 28 is specific, 29 is specific, 30 is specific. Rule 31 is the residual value, which is any other cost plus approach. 61, input tax credit is available in respect of tax paid on. If it is for personal consumption, it is not available. Free samples, it is not available. Services on which taxes has been paid under composition levy, it is not available. So none of the above input tax credit is available. So option B is the correct answer. Then comes e-way bill is generated in electronic form number. What is it called as? E-way bill GST 01, e-way bill GST 01, GST e-way bill, GST e-way bill. So GST e-way bill 01. Option C is the correct answer. Moving to question number 63. E-invoice is not mandatory in case which of the following category of persons, irrespective of their turnover. So it says banking company, insurer, person supplying passenger transportation services, all of the above. E-invoice is not mandatory, irrespective of their turnover. If there is no business activities during the tax period, then as per CGST Act, no return to be filed, nil return to be filed, return may be filed on receipt of notice from authority. Matter of no business activity should he inform the letter to the authority. So the option is nil return. You need not wait for notice to come. You need not keep quiet by not filing the return, or you need not intimate by letter of authority. Simply file nil return. So that is taken care. So that is the CGST Act says. Then comes which section talks about the power given for making rules under CGST compensation to states Act. Okay, so section 12 talks about the compensation, says power given to central government. So these are all straightforward questions. If you know, you will be able to write answer. Otherwise, you will not be able to write the answer. The time limit for pronouncing the advance ruling under section customs under Customs Act is 90 days. Is the time limit given for pronouncing the advance ruling. Moving further, 67. The classification of car without tires as car is a classification according to the which rule? Principles of rule number 2, 3, 4, 5. This is the first rule which says that a part of the product which is not fully manufactured will be considered as the actual product. A pencil without pencil and rubber together at the top of the pencil. Without the rubber, it is pencil. A cap without a pen, it will be taxed as pen. A tire without a car without a tire will be considered as a car. So rule 2 talks about this interpretation. So rule 2 is considered as the correct answer. In terms of section 17.5, the CGST Act, block credit means the inward supply is provisionally should be allowed, fully allowed, not allowed forever, or should not be allowed provisionally. Not allowed forever is the correct answer. Option C. Option C. 68, 69. The registered person has claimed depreciation on the dash of the capital goods and plant and machinery under the provisions of the Income Tax Act. The input tax rate on the said tax component shall not be allowed. What should not be claimed? The tax component of the cost. So option B. If tax component of the purchase machinery, if claimed as depreciation is claimed on that, then input tax rate will not be available as per section 16. Section 70, transportation of dash of by a goods transport agency in a goods carriage is exempt from GST. Agricultural produce, organic manure, milk, all of the above. So there won't be any GST levied and it is exempt from GST if the transportation is on essential goods. When can a claim of ITC under GST be made under reverse charge? After payment of tax liability, after issue of invoice, earlier of A or B. So 71 talks about that you will have to give the calculation and the earlier of A and B is the thing that will think and then write the answer. That earlier of A and B becomes the wrong answer. Earlier of A and B becomes the wrong answer. This is general common sense that we think. But after payment of tax liability, then only we can claim input tax rate under reverse charge mechanism. As per Article 279A, who is empowered to constitute GST Council? President is empowered. 72 gives power to the President for constituting the GST Council. Question 73. Which of the following state tax have been subsumed in GST? Now, if you simply read subsumed from GST, okay, then you will tell central sales tax, central excise duty, service tax, all of the above as the correct answer. But you will have to read which of the state tax. Then specifically, it is only central state tax. Option A is the correct answer. Option D is wrong because they're asking state tax. Because central excise duty is levied central, service tax is levied by central. That is a central tax subsumed in GST. That is not a state tax subsumed under GST. So this is where we think that we have written correct answer. But without reading the complete answer question properly, we will go wrong. The higher eligibility of turnover limit of 1.5 crore under composition scheme is not applicable to which state? Assam, Uttarakhand, Himachal Pradesh, or Bihar? Uttarakhand is the correct answer. So if you have read the exclusions properly, that is why I keep telling most of the times in the tax laws, most of the times they ask the exclusions, what is not applicable in general to somebody. That is more likely being tested. Intimation for withdrawal from composition scheme should be informed by submitting GST CMP 04. GST CMP 04 is the correct answer. Out of the following, who is not eligible for composition scheme under the CGST Act? Casual taxable person, not allowed. Person engaged in outward supply of goods, not allowed to take composition scheme. Non-resident taxable person, not allowed. So correct answer is all of the above. For all of these three people, you cannot opt for composition scheme. Moving further, 77, the prime purpose of place of supply is to determine what? Whether a supply is inter or intrastate, whether CGST, SGST, or IGST or UTGST to be charged, which state or union territory will get the tax revenue. All of the above is the correct answer in case of question number 77. And then comes the prime. Mr. R is supplying only services which are exclusively taxable under RCM. The value of such supply is 51 lakh. Which of the following statement is true? Compulsory registration is required. Compulsory registration is required as turnover exceed 50 lakh. There, first of all, there is no limit of 50 lakh. It is 20 lakhs or 40 lakhs. Registration is not required in this case. Compulsory registration is required as person engaged in supply of services only. So section 22, 23, 24 of CGST Act says that if person is exclusively engaged in providing services which are engaged in RCM, then registration is not mandatory. So option C is the correct answer. 79. In IGST Act, the supply of service is considered as import of service. When supplier is located outside India, recipient is located in India, place of supply of service is in India. All three conditions has to be satisfied. So D is the correct answer in order to consider this as a export of or import of service. Moving to question number 80. The goods and service tax network, a special purpose vehicle set up by the government primarily to provide information technology infrastructure, whether it is a public company, government company, private limited company, or a statutory corporation. So the correct answer is a government company. Moving further, which of the following activities is a supply of service? Transfer in title of goods, transfer without transfer of title in goods, goods with condition that property shall pass at a future date. All of the above. If you simply consider that supply, all of these are supplies. But the question is supply of service, specific. First one is supply of goods. Third one is supply of goods. So this is supply of goods, this is supply of goods, and this is supply of service. So option B is the correct answer. So if you generically go and answer, then you select D, which is wrong. 82, actionable claim, which is given neither product or service. So which is given, we said that Schedule 3 is talking about, which is not chargeable to tax under GST. So Schedule 3 again. So this same Schedule 3 has come 2 times in the same question paper. Which of the following is a mixed supply? A soap manufacturer offers a free bucket with detergent. A 5-star hotel provides 4 days and 3-night package with breakfast. This is completely service. There is no mixed supply. As per sales contract, goods are packed and transported with insurance by the seller. So this is not a mixed supply. This is a composite supply. So mixed supply is soap manufacturer offers free bucket with detergent. Option A is the correct answer. If you generally think, then you will select option D. That is wrong answer. Question number 84. Krishnan, a registered dealer in Karnataka, has opted for composition scheme. He has a taxable turnover of goods for rupees 20 lakhs and exempted turnover of goods for 15 lakhs within Karnataka in a tax period. If Krishnan is a trader, then GST is to be paid on 20 lakhs. Okay, so this is on trading. In case of manufacturer, he has to pay on full. In case of trader, he has to pay only on taxable turnover. On taxable turnover, 20 lakhs into 1%, 20,000. Input tax credit can be availed on GST paid under composition scheme, not allowed. Forward charge mechanism, allowed. Reverse charge mechanism, allowed. Both forward charge and reverse charge is allowed. So input tax can be availed on GST paid under. So most relevant answer is both forward charge and reverse charge. So option D is the correct answer here. Then comes Nathan is a resident in Chennai, working in Hyderabad, traveled to Cochin for business purpose and booked a ticket for an event there in in Cochin, performed by a team from Delhi. In this case, place of supply. In case of any event, the place where the event is held, that is considered as the place of supply. So Cochin is the correct answer. In case of goods supplied on approval for sale, return basis, the due date for issue of invoice is before the supply, at the time of supply, or 6 months from the date of supply, or earliest of the above 3. So it is earliest of the above 3. So before the time of supply, or at the time of supply, or before 6 months. So if it is given on sale, when it is sold, actually, before that you should give the invoice, or at the time of supply, you should give it. Or if it is not at all sold, by 6 months, you should give the invoice. So earliest of the above 3. AVM Sounds entered into a contract to purchase the copyright of a music album of Priyam, a music composer. The composer finished the work and gave the CD to the music company on 20th July and issued invoice on 24th July. So this is payable on reverse charge. The consideration for contract is 2.4 crores was received by the composer on 4th September. If GST is payable under reverse charge for this, the time of supply shall be when the money is received. That is 2.4 crore is received in September. So the 4th September will become the time of supply, because that is when we can pay tax. 89, an advocate provided legal consultancy services to be for a consideration of 50,000 on 14th August 2023. So there was change in the rate of GST from 20th August. In this case, if the invoice and the payment for supply received after 20th August, the time of supply shall be. So here, when 2 of the activities are after the change. So before change, it is, so date of payment and date of invoice is after the change. But date of the 14th August, what has happened? Consideration. Legal consultancy services. So consultancy date of service is before. So when 2 of the things are afterwards, whichever is earlier, date of payment or date of receipt, whichever is earlier. So A or B, whichever is earlier. because A is receipt of payment or issue of invoice. Question number 90, which of the following can avail of every month an amount equal to 50% of the eligible input tax rebate? So there is an option for banking companies, NBFCs, and financial institutions. So all of the above, they can either follow 50% or they can follow proportionate method. Then comes to whom the registration under CGST Act is compulsory. So P is making a reverse charge supplies only. If they're making reverse charge only, then not required. Q is person required to pay tax under reverse charge, then registration is required. R, a casual taxable person, notified goods up to 20 lakhs. Since it is less than 20 lakhs, not required. S, an input service distributor, mandatorily required. So Q and S, registration is required. That is option C. Q and S, registration is mandatorily required. 92, tax invoice under GST may not be issued if the value of goods or services or both is less than 200 rupees. That is, invoice is not mandatory, and this is applicable in B2C only. GAIL Limited of Mumbai Gas supply gas to Copper Limited. In this supply, the supplier is not able to ascertain the quantity. If he's not able to ascertain the quantity, he cannot issue tax invoice, he cannot issue bill of supply, he cannot issue payment voucher, then he can issue only delivery challan. Once the goods is received at the place, when they unload, they will get to know what is the quantum, and then he will issue the taxation. So at the time of removal, he will not know. So it will be delivery challan. Question number 94. Consignment value of goods which is issued in e-way bill includes everything. Central tax, state tax, cess charged, everything, all of the above will be considered. Consulate or embassy, foreign countries or any other person or class of person, if required to make an application for such refund, they can make application for refund within 6 months. Okay, so that is the correct option, 95C. 96, a general audit under section 65 is conducted to be completed within 3 months. And this can be extended for further 3 months plus further 3 months. So total it can be extended for 6 months. Option C is the correct option. 3 months, first level approval, further approval can be taken for 3 months. So 6 months extension can be done. And that will be the option C as the correct answer. State of Jammu and Kashmir has been divided into 2 union territories, namely Jammu and Kashmir and Ladakh in 2019. After the reorganization, the Jammu and Kashmir GST Act is applicable only to the Union Territory of Jammu and Kashmir and not to any of the other things. Option A is the correct answer. Moving to question number 98. The input tax credit in respect of GST compensation to states says on supply of goods and services shall be utilized towards the payment of. What are the things that you will get? Whether it can be claimed for all of the above. So you will have to see from the purpose of the cess. So what they are using, the input tax rate in respect of GST compensation to state cess is applicable. The cess that is paid, the input tax rate also will be applicable only for cess payable and not for any other things. The important purpose of implementation of Customs Act is to regulate levy and collection of customs duty, regulating imports and customs and exports, conservation and augmentation of foreign exchange, all of the above. So all of the above is the objective. That is correct. Question number 99. All of the above. Last question, question number 10. Goods for customs duty levy, which cannot be classified in accordance with rule 1, 2, 3, shall be classified under rule number 4, which is akin principle, means similar principle, akin. That is considered as rule number 4. Option C is the correct answer. So with that, we have completed the discussion on all the aspects on December 2023 MCQ questions. Any questions specific to that, you can reach out to us on our Excel Academy WhatsApp number and we'll be able to answer you. With that, I think we will be able to conclude the live session here. And since I don't have any questions on the chat box, we will be concluding the session here. So thank you all for participating in the live session and all the best for your exams for those of you who are writing under the old syllabus on June 2024. So let's meet in the next session, if any, and we'll conclude the live recording for the day here.